The next thing I would like to discuss with you is the government initiatives. I'd like to give you a brief history on the successes and failures of that program. Let's start off with the beginning of this process. Back in October of 2008, when this epidemic started, the government came up with a program called HOPE for Homeowners. Again, I initiated in October of 2008. The objective of this program, to put it in basic terms, was supposed to help roughly 4 to 5 million Americans refinance their mortgages to a more affordable term to help them stay in their home. Okay, so from October of 2008 to March of 2009, I want to ask you a question. How do you think that program fared? How many people did it help? 1 million? 150,000? 200,000? The real number was approximately 23 people nationally it helped out. It's an embarrassment. It's an absolute indication to where the rushing into a process to try to create a program to help you out with wasn't well thought out. Again, that's my opinion. Next portion of the program, the government initiatives came up in March of 2009, when the new administration came in, was the Homeowner Affordability Stability Plan. That had the umbrella, under that it had two portions, your refinance portion and your modification portion. Now, I want to start off with the modification portion, and the acronym for that is HAMP, HAMP. And again, addressing with the modifications. Modifications have been pushed as the #1 solution to resolving the housing crisis issue. You've seen from the government websites, through the media outlets, that this is what's going to help solve this problem. Well, I can tell you straight up, and many of you already know this, that's why you logged on to view this webinar today. It doesn't. It doesn't work. You have a less than a 20% statistical chance of getting your modification approved and put into permanent status. The HAMP program is supposed to give you, 1, be permanent. 2, give you interest rate between a range of 2 to 3%. Okay, so how does the HAMP program work? Well, you contact your lender, yourself, or a company like mine will contact the lender and initiate the process for a modification. What they would do is upon pre-acceptance, in this example, if your payment was $1,000 a month, they might lower it down to around $600 a month. You'd be paying on time for 3 months in a row, and then you're supposed to be granted to the backstage for final approval. Now, your job is to contact the lender and to get them to final approve you. Now, what do I see from that? Many clients tell me they've been 6 months, 8 months, 12 months into the process plus. And what happens on that? They're turned down. They're contacting lenders every day, and they're kept being pushed back, and a majority of them are turned down. Now what happens? Now you owe the money that you were short, or they tack it on as a forbearance to the back end of the account. Unfair. The problem with this process, it's voluntary. The banks have to voluntarily work with you. And why would they do this? Why are we doing this HAMP program? What's their incentive to try to even get you started in this process to where they're not approving you on the back end of that? Again, conjecture, my opinion on this one is, with the HAMP program, if you, as a mortgage holder, pay on time for 3 months in a row, the government will pay that servicer, Bank of America, Wells Fargo, $1,500 for the privilege of you making 3 months in a row worth of payments. So they get paid $1,500 of our hard-earned taxpayer money. Then after that, there's no other financial incentive for them for up until 36 months. So you fall into what I call limbo. Now, on the refinance program, it has to do, again, they project to do 5 million refinances. Now, the acronym for that is HARP. Now, how successful has that program been? Well, as of the end of 2009, you're looking at approximately 150,000 refinances total closed. Put that, you're about a year into the program, and you've got 150,000 versus a projected goal of 5 million over a 2-year period. Answer the question yourself, how successful has that been? Some of the nuances were, back when they started this loan-to-value program, what is a loan-to-value? Loan-to-value is, on the refinance, how much the loan is compared to how much they're willing to lend to you, meaning the loan versus the value of your house. The program on the refinance started off at 105%, meaning if you get a $100,000 mortgage, your value was $100,000, they can go up to $105,000 loan on your refinance. Obviously that wasn't working, and recently as of September of last year, they went ahead and revised the program from 105% up to 125% loan to value. I don't know about what you think about this, but from my background, those are called subprime loans. Now the government is doing ultra aggressive subprime loans with a very, very high default rate. So is that the best course of action? I'll let you guys decide that. Now, one last thing I want to mention is they've recently come out with another program in April of 2010 that is in conjunction with the HAMP program, which was the loan modification program. For example, if you didn't get qualified under the loan modification program, which again, many of you won't, what they'll do is they'll offer you, in essence, a cash for keys program, to where they'll give you up to $3,000 to leave the premises, go find another place to live, and that'll be a payoff to go help pay for your moving expenses. And then what we'll do is they'll take your house and put it through the foreclosure process. That's in essence a very short history on the government initiatives and how they fared. So to get started, go to our website today at H4H Consulting.com and pick the package that best suits you and begin to fight back. Don't wait, don't hesitate. The bank certainly won't. And remember, there is hope with Hope for Homeowners Consulting.